This guy right here is going to tell you why mortgage rates are not following all the other economic indicators going on right now. All right, stay tuned. All right, gang. Hey, you're with The Broker. And The Broker is sponsored by U Mortgage. Thanks to those folks. And I'm here with KP, CLO and partner at PRMG. Hey, we're back at the country club. It's kind of like our 1-year reunion. 12 months ago, it was during COVID. They let us in. We started filming. It is amazing.
We kept them in business.
We did.
We laid down the corporate card.
Yes, we did.
They allowed us to be here.
Yes.
It was nice. It's
Yeah.
good.
And
Here we are, a year later. There's still nobody here.
A year later, we're marking this occasion with 2 microphones. It's amazing.
That's right, Gary. We got 2 mics.
Hey, so let's talk a few things to unpack tonight. Coming up this week, we've got National Mortgage Broker Day.
Yeah. 18th. Yeah,
the 18th, Sunday.
Yeah.
It's not Christmas, but hey, I take a lot of pride being a mortgage broker. PRMG being an amazing TPO lender.
Yeah, we sponsor, we're built by originators for originators, our wholesale channel. We sponsor AIM. We're the title sponsor on their Anaheim get-together this past Sunday. It was pretty cool.
Yeah, well attended.
There's a deal every day this week throughout the country for AIM.
Yeah, and speaking about mortgage brokers, celebrating, we will, of course, see you all in September at the AIM Fuse event at the Bellagio. I'm really looking forward to that event.
Oh, yeah. Vegas is reopened.
Yes.
I read a stat today from Elliot Eisenberg, the bow tie economist, that gambling is up and traffic is up, even though air flight and air travel is down. So people are driving in droves to Vegas and losing as much money now as in 2019.
Well, yeah, I remember a couple of drives that you and I have taken to Agua Caliente. So, yes, I think this is...
kind of halfway there.
Yes, accurate. Trended down. Mortgage rates have trended down in the last 7 to 10 days. Mm-hmm. I'm looking at all the other economic stuff going on, and it's like mortgage rates are going down, inflation's increasing. Like, why is that? I don't get this economic cycle at all.
Yeah, it's you know what? Nothing goes in a straight line. So let's just say that.
Okay.
Right?
All right.
So, all the story and all the headlines is lumber prices are out of control and housing is expensive and inflation's here to stay. And then the Fed said, no, it's just transitory. Like, this is all going to pass. And the market just said, okay, for now, you're right. You're right. So even though today we had a huge producer price index reading, like 9% inflation, 5.4% yesterday on the core consumer price expenditures. I mean, that's like the main reading that the Fed looks at. I mean, it's expensive to drive cars, it's expensive to buy cars.
Right.
It's gotten crazy.
Right.
Yet, interest rates, 10-year Treasury, down. Like, significantly down. We saw a 1.27 handle on the 10-year Treasury. So we got a little reprieve in rates. So again, not everything goes in a straight line. Long term, with trillions of dollars and the money supply being pumped in the system, yeah, it's possible that we are going to see some real inflation that is not transitory. But for now, the markets are shrugging it off. For those of you out there that are originators, lock your loan.
Absolutely.
You have no idea. I mean, it can move quick one way or the other.
Yeah, it's a great week. I got a little bump in refi action. We got some stuff submitted, so yeah, we're real excited about that.
Yeah, a little gravy there.
Yes.
Again, it's something we don't control. If the rates are high and people don't have a benefit, then you're out. But people always need to find a home.
Yeah. Okay. So let's talk a little bit about the market. At this point in time, if you're in the market, are you buying in or are you selling off? What are you doing?
Well, first of all, I am not a financial advisor. I am not responsible for your losses, only your profits.
Yes, KP.
There are risks involved. You can lose money, but I dabble. I do like to play. I do options. I invest in crypto. I mean, I'm trying to make my money make money. I don't want to work forever, although I love what I do. But I think that one of the stories that's out there right now is that with the stimulus ending, and the federal and state stimulus ending, between now and September, some states even October, that there's going to be less money sloshing around the system. But there are 9.2 million jobs open. So, as people get back, kids go back to school, maybe single mothers or single parents are able to start work again, the summer's over, maybe we'll see people, get back in their jobs. We're starting to see this little bit of transition, but there's this story that's going on right now. Have we seen peak growth in the economy? That is like this thing that's being talked about. It's hard to say that, when 70% of the economy is consumer spending, but the stock market, the talking heads are talking about peak growth. Like we've grown so much so fast that it won't be this good. So, when that story, is reality, when perception becomes reality, there could be a correction in the stock market. We're seeing all-time highs in the NASDAQ, the Dow, the S&P. We're probably due for a correction. Could we see a 7 to 10% correction between now and Labor Day or even mid-September? I think so. So for me, I got whacked last year during Labor Day. It was a brutal sell-off if you look at the market. So I basically this is what I've been doing. Okay. Some of my positions, everything with that's not fundamentally sound, I've been trimming. I've trimmed a bunch of positions that don't have price to earnings ratios, PE ratios under 40, and that's even high traditionally for the S&P. I mean, typically you're at 25. Right now the market's at 32. Maybe it's undervalued. I don't want to get into all the technical stuff, but my point is, like, I'm holding back and I'm holding some dry powder because I want to see a market correction. I still am in the market. I still have stocks, but I want to see a little bit of a correction, and then maybe get some deals like on Amazon or Nvidia, or get some deals and some bargains on some really fantastic growth stocks. But that's just But the market's a totally different animal. It's like everyone's making a lot of money, everyone's doing well in the market, and then you got people that are struggling and they're about to lose their stimulus checks. And so it's like it's what we talk about so often. I just feel like there's this huge divide, this wealth divide, this widening of the middle class and the wealth gap, and all we can do in this business is just try and put people into a house and give them that wealth.
Totally agree. Like right now, in the next 7 days, as originators, go grab all those low-hanging fruit refis, and then keep pushing the purchase business.
You gotta help people get first-time home buyers.
Yeah.
Get them in homes. If they have dings on their credit, don't throw them away like a call center would online. Oh, I can't do a loan now. Okay, have a nice day. Put them in your CRM. Right. Get them with Credivolve or some company, or Sam Parker, or somebody that will help them get their credit restored.
Yeah, if it's not a right now, it's a later, and here's what you need to do to get to later.
Yep,
for sure. Hey, I'm so glad we could pull you off the golf course for 5 minutes to do this interview.
I wish.
Hey,
don't let the golf shirt fool you.
Listen, you're still beautiful even in a golf shirt. Hey, it's been a great time reuniting with KP here at the Country Club. A year later, here we are. I'm the broker, Rich Lane, and I'm out. Thank you so much.
Cheers.